Hey everyone, and welcome. Today we are jumping into what was, honestly, a monster quarter for Lending Club. We're going to break down the CEO's opening remarks from their latest briefing because they posted some absolutely huge numbers and we really need to unpack how they pulled it off. Okay, let's get right into it.
So first up, you see this number and you just have to say, wow, a 37% growth in originations. Now, just to be clear, that's the total amount of new loans they created. In today's economy, a jump that big isn't just growth. No, that's a company planting a flag and showing some serious market dominance. And, of course, that huge surge in new business flows right to the top line. The company followed up that originations number with a 32% growth in revenue. You know, this just proves they're not just busy for the sake of being busy, they're turning all that activity into some pretty significant cash.
But here it is. This is the number that really tells the story of the quarter. It's all about profitability. Their diluted earnings per share nearly tripled. And this is the crucial takeaway, right? This isn't just growth for growth's sake. It's smart, it's efficient, and it's incredibly profitable. Exactly the kind of thing investors go crazy for.
So to really get how they did this, here's how we're going to break it all down. First, we'll dive a little deeper into those headline numbers. Then, we'll get into their winning formula. You know, what makes customers actually choose them. After that, we'll unpack their secret weapon, this hybrid model that's part bank, part marketplace. We'll see how that powers what they call their member flywheel. And then finally, we'll take a quick look ahead at what all this momentum could mean for the future.
All right, let's get to it. Section 1. An outstanding quarter by the numbers. We've seen the big, flashy figures, but let's add some real context to just how impressive this performance really was. You know, the first thing you have to understand is this wasn't some kind of lucky break. The company was firing on all cylinders, hitting it out of the park on every single key metric. I mean, it's one thing to meet what the market expects, right? But it's a whole other level to confidently smash your own ambitious goals. That tells you this is a business that's really in control.
And here's the hard number behind that 37% growth we saw. Quarterly originations hit $2.62 billion. That was well above even the high end of what they told everyone to expect, and it was fueled by really strong demand from both everyday consumers and the big loan investors.
So that leads us perfectly into our next section. Okay, the numbers are huge. We get it. But how are they doing it? This is all about their winning value proposition.
So you gotta ask, right? In a market this crowded, what is Lending Club's secret sauce? Why is a borrower choosing them over all the other options out there?
Well, we have a pretty direct answer to that. When a customer sees a loan offer from Lending Club sitting right next to a competitor's offer, they choose Lending Club 50% more often. Just think about that for a second. In a direct head-to-head competition, they are winning by a huge margin.
And the CEO, Scott Sanborn, he really boils it down to two simple things. First, their rates are competitive, and that's because their credit models are so sophisticated. And second, the process is just fast and easy. It's a classic formula, right? Get the price right and make it simple. But they are executing on it incredibly well.
And this is so important. It is really easy to grow fast if you're just willing to hand out risky loans. But Lending Club is doing the exact opposite. Their own data shows their credit performance is about 40% better than their competitors. What that means is their growth is built on a solid foundation of quality. They're not winning in spite of being careful. They're winning because they're making smarter decisions. Okay, that tees up our third section just perfectly. Bank power, marketplace momentum. This is where we get into the really unique business model that's fueling everything we've talked about so far.
See, the key thing to get about Lending Club is that they're not just another fintech company. They're not just a traditional bank. They're both. And this digital marketplace bank model gives them two powerful engines, creating a kind of resilience that honestly most of their competitors just can't touch. So first, let's look at the bank power side of the equation. They've built up a balance sheet of over $11 billion. This lets them hold on to loans themselves and generate that steady interest income, giving them a really stable foundation. And like the CEO says, this creates a durable, resilient stream of revenue that non-bank fintechs simply can't copy. In fact, this quarter, they generated their highest ever net interest income, $158 million. That's the power of being a bank right there. But that stable bank is only half the story. The other engine is their marketplace. And that thing is designed for pure, high-octane growth. This is where they connect outside investors with their loans, and it is absolutely on fire. Revenue there grew by a massive 75%.
And this isn't just one thing working. The growth is coming from everywhere. They had a record quarter for structured certificate sales, which topped $1 billion. They just signed a new deal with the investment giant BlackRock. Plus, they launched a new product that's successfully pulling in capital from the insurance industry. The demand from big money to get a piece of their loans is just incredibly strong.
Okay, this all brings us to our fourth section, building the member flywheel. This is the big picture strategy that ties everything together. It's how they turn today's success into a self-sustaining engine for future growth. So, what in the world is a member flywheel? Well, think of it like trying to spin a really heavy wheel. That first push is the hardest, right? For them, that's creating great products that get people to engage. That engagement then leads to repeat business. That's the second, easier push. And because you're not spending money to get that customer back, your costs go way down. That gives the wheel even more momentum, making every next push easier and more powerful than the last. And we can actually see the specific gears that are making this flywheel spin. They're launching things like a new checking account and debt management tools, and these aren't just little add-ons. They're designed to get people using the platform every day. And guess what? It's working. They're seeing this massive increase in mobile app logins, and that app is the front door to more repeat loan business. And here's exactly how that whole process plays out. Step 1, launch products that people actually want to use. Step 2, that drives member activity, like that nearly 50% jump in app logins. Step 3, all that engagement naturally leads to more repeat business through the app. And the final, critical result? A sustainable growth loop where every new loan costs them less to acquire than the last one. It is just a crystal clear sign their long-term strategy is paying off. And that brings us to our final section, a glimpse at the future. We've seen the incredible numbers, we've seen the winning strategy, and we've seen this flywheel that's really starting to spin. So let's put it all together. You know, when you step back and look at all the pieces, that dual bank and marketplace model, the better credit performance, and that member flywheel just starting to gain real momentum, it's pretty clear Lending Club has built a powerful, self-reinforcing engine. The business is firing on all cylinders. So really, the only question left to ask is, how fast can this thing accelerate from here?